are getting Ultratech's numbers. On the bottom line, the company has posted a standalone net profit of 391 crores. This compares with our poll of 465 crores. Even the top line, it looks like 7,771 crores is what the company has done. The stock is taking a bit of a knock. We'll try to calculate more details, but 7,771 crores. This compares with our poll of about 8,000 plus crores as well. So looks prima facie, the numbers look like they are below the poll that we had on both the top line and the bottom line. We'll try to get in some more details as far as the operational performance is concerned. Yes, realizations were expected to be slightly subdued. Volume growth of 10% was on the cards, but 7771 on the top line.
Domestic sales volume, I don't have the exact figure, but in their press release they say that there's a 21% jump over Q2F on a Y-on-Y basis. All
right, and we're getting margins. It looks like it's like a miss out there as well. Margins are at 15.5%. Our poll was 17.2%. The EBITDA has come in at around 1,200 crores. Our expectations were about that 1,385 crore mark. So we have Nigel with us. Nigel, looks like a miss.
Yeah, I mean, just going by the numbers that you all are stating, even if the volume growth is around 21%, we were factoring in a 23% volume growth. So we'll keep an eye out on that front. There was a bit of a whisper number that suggested that yes, it's going to be a bit of a miss. And I think the standalone EBITDA number has come in more or less in line with what the whisper number was. So the domestic sales volume growth is much lower. It's coming at around 21%. That compares with nearly around 23%. So it appears as of now, it's a bit of a top-down miss as we speak. So as of now, those are the details. Remember, from Ultratech Cement, the margins were always expected to contract, but I think it's contracted more than estimated. One, the realizations are weaker, as the screen is telling you. The second factor is that, in fact, they use petcoke for close to around 80% of the entire fuel mix. So that's the other factor that plays out. Then petcoke prices are up by close to around 20%. So that explains why those numbers are a tad bit weak. I'll just go through, in further detail and get back to you.
Okay, we have Prakash Diwan who's joining in. Prakash, you've heard the first numbers. I mean, it pretty much looks like revenue downwards. Everything is below what the street was expecting.
Absolutely. So, I think the street was willing to live with a little bit of a slowdown in the volume growth, given the fact that this was a quarter that wasn't one of the best seasonally. But what seems to be disappointing is, the miss on EBITDA, the miss on profitability, everything is definitely a miss. I think Nigel say it's a top-down miss. So it's an all-round miss of sorts. And I don't think the market was in a great mood to anyway celebrate cement numbers, and this means that all the other players will also kind of be now watched with a little bit of a dark lens in terms of what they could report. So that's the worry. The sector probably gets a bit re-rated downwards given these numbers.
All right, that's Ultratech. We also have Mayuresh Joshi with us. Mayuresh, what do you make of these numbers? The stock is down about 5%. Looks like a top-down miss?
It looks like, Mangalam, yes. And as Prakash was mentioning, I think the elevated costs have probably taken a hit. At the same time, I think the expectations of a reasonable volume growth, I think the volume growth has also disappointed. So I think lower volume growth, realizations not as strong as one expected, and input costs obviously taking a toll. So I think it is a top-down news.
Absolutely. What do you do with the stock, Mayuresh? As of now, what are the, what's the current rating on the stock? And, as this Ultratech always gets premium multiples, will you look to scale down that?
Probably, I think one really needs to have a look down at the numbers again by a line and line and an item basis. But what again, I think the expectations largely are a bit in the street, Nigel, is that with the kind of acquisitions that they've done, specifically in terms of the JP plants and the Century Textile assets will get merged into their consolidated numbers over the next few quarters. I think the volume growth is going to be a little bit tepid. On top of that, I think the realization growth can be tepid as well, because all the other players will be trying to push through. And as you pointed out, I think petcoke is close to 75-odd%. Those prices have gone through the roof. So the alternate sources in terms of energy consumption is something to be seen from the management commentary, right, whether they're able to maintain their margins. So the whole rating probably continues still, but one really needs to look at the details in the fund.
Okay, we'll just take a break from Ultratech for a moment. There's news coming through on Lupin. They have announced the completion of a US FDA inspection which was carried out at their Pitampur Unit 3 in Indore. It was a GMP inspection for the facility. It was conducted between the 8th and 18th of October, but importantly, 5 observations were issued to Lupin, and all of them are said to be procedural in nature. We don't have the exact observations themselves, but for now, the stock reacting about 2% lower. We'll try and get Ekta in to try and put this into perspective about how critical this facility is. But for now, back to Ultratech. Jaspreet Singh Arora of Systematic Shares and Stocks is also with us. Hi, Jaspreet. Good afternoon. You've gone through Ultratech's numbers. How's it looking?
Hi, good afternoon. So it's looking muted. We were expecting, EBITDA per ton at least on a base case basis closer to 800 rupees. It's come in $50 lower. So it's about closer to 750 prima facie as it looks like. So clearly on EBITDA and profit, the results are muted. And we could expect that with the ACC's numbers day before, the street was largely anticipating that.
All right, Jaspreet, for these numbers, what kind of utilization levels you were working with for the JP units? Because that will help the top line, but that's what will compress the margins even more, because the cost differential out there is nearly around 100 to around 150 rupees, isn't it?
Yeah, that's right. So management had clearly highlighted last quarter that, the differential would narrow down close to about 100 rupees, nothing beyond that. 100 rupee would remain up to 100 rupees. So utilization for JP would be upwards of 70%.
Right. All right. And as a house, what kind of a rating do you have on the stock right now? Will you be looking to scale down, that multiple?
Actually, we had already scaled down the multiple in the last quarter and also in our recent sector update that we released 10 days back. So we are now working with a multiple of 13 times EV EBITDA FY20 for Ultratech, which means that 3,232 rupees as the target price, and we have a sell rating.
All right. Prakash, you had some incremental thoughts?
Yeah, no, so I'll tell you what, my sense on the stock price, we were anticipating soft numbers, they've been muted, that's fine. But given the fact that the next 2 quarters are possibly going to be very strong for this sector, and the JP, synergies would also start kind of throwing in some positives, especially in the Jan-March quarter. I think the stock will not be, I don't know how much down is it today, whatever it had to make a bottom of sorts, it would after these numbers. But there will be a little bit of a pickup. There will be a lot of buying that could start coming, not today itself maybe, but over the next week or so. It's something like what HUL went through. The numbers were okay, disappointed a bit. The stock showed some initial negative reaction, and then you see after that 3 days in a row, it's been holding its ground. So I think Ultratech would also set the trend very similarly in that. So I wouldn't be surprised if by tomorrow, by Monday and next week, it actually turns into that 3650, 3700 plus zones after a while.
All right, Prakash, Mayuresh, Jaspreet, thanks very much for joining in. Thanks also to Prakash Gaba for answering queries. But Nigel, before we wrap up, your final thoughts?
Well, these numbers, they definitely look very, very disappointing actually for the past quarter. The street had braced in some part of that because ACC didn't, surprise positively, and that was supposed to be the only company that was likely to, to surprise positively. So these numbers go down as a bit of a miss, but the stock has made a 52-week low today. Let's see whether or not that bottoming out process is on, and also we'll get the presentation. They'll explain more in detail whether or not that cost differential with JP Cement's acquired assets, whether that is narrowed down to that promised 100 rupees per mark. So we'll wait by out there.
All right, Nigel, thank you so much for that. But just as